I admire so much of the new fresh look without the beard, right? And
Yeah.
what you mentioned behind the scenes is my biggest nightmare, man. I'm really afraid of losing this. This is only hair that I have on me.
I was trying to trim my beard and the clip guard fell off. So there you go.
Yeah, man. I cannot imagine just me without the beard, bro. I would look like a completely mad person.
Hey guys, welcome back to the show. Today we have Adrian with us, mentor, influencer, founder of the Burb Nest, which is a consulting blockchain company. How are you doing today?
Doing great, my man. Thank you for the invitation, Mauricio.
Thank you so much for doing this with me. And by the way, you have one of the most prestigious certifications, right? I think you are the only person in Poland with the CMT certification. Is that true?
That's to the best of my record, to the best of the knowledge. There's a database for the CMTs, and last time I checked it, I actually confirmed it via email because it was so hard to believe this. I got a confirmation, over the emails that I was the only one holding this title, this charter in my country. All right.
Wow, that's incredible. Cannot wait to hear the story behind your certification. I'm sure it's not been easy to obtain. So well done. Congrats on that one.
Grazie mille.
Prego. But hey, for those of whom they don't know about you, do you mind to give us an intro and tell us about yourself?
So I'm gonna give it a crypto story. So the crypto story, 2017, early 2017, after I graduated with my master's in chemical engineering, I finally had enough time to sit down and learn about the markets a little bit. Even though I tried, before as a, I guided people as a private tutor, quite successfully. I got a pretty good quality, of the results audience. I was this science guy. I met some good people, along the way. They were very grateful. There was a lot of reciprocity, a lot of this actual, like I said, the success stories, if you will, for those people, who really took up the courses, which is a good thing. And just like we mentioned, before shooting this, it taught me so much more about myself, than when I did teach the other people, right? Because it taught me twice, if you will. And I did a private, mentorship, if you will, in the sciences. Did it quite well. So that's how I kind of like, raised a little bit of money for myself at that time. However, it wasn't too much scalable because there was only one of me, right? So I started searching for different paths, for auto paths, as in, do some simple imports, exports, for some simple goods. It didn't really do well, right? Mainly because of the currency fluctuations, mainly because of the euro, denominated and PLN in the Polish zlotys, or the dollars, So there was a little bit of a touch about the markets that I started tracking the actual currencies. Okay, and then I was like, how on earth, in theory, I should have sold that, with profit. And in the meantime, by the time I sold it, the stuff, it actually came up as a loss, right? And it came up as a loss because of the currency fluctuations. So I started investigating a little bit deeper into that. And after I graduated from the chemical studies, I got enough time on my hands, quote unquote enough, right? There's never enough time, enough time to kind of like bother with the finance a little bit more. And that was the startup idea and concept that I had along with my friend, that we were supposed to do on a subscription basis. Like you would order like a subscription box every month right in front of your door. That would come up with some sort of like smart gadgets filled inside, right? So you would get like some stress relievers, like you have those different cubes, with the rotators, and you can just manually do stuff to relax. Otherwise, there were like some smart powerful LED lighters, that they were so powerful on the diodes that they could light up the fire, in the middle of a forest, if you will, right? So there were a lot of those smart gadgets that we wanted to pack in there. We traveled to Switzerland, go search around the conferences, maybe just to raise a little bit of capital. Still, after a year of those, call it struggles, business struggles, my friend basically got engaged into crypto on a full-time basis. So I was there kind of like left all alone, and I was like, okay, it's a one foot on, one foot out, so I better decide and choose, make my way. So I graduated and made enough time, to kind of like go into crypto. Beforehand, my grandfather used to own Bitcoin in 2012 and 13, I think. He was a day trader. He was a gambler. He was a day trader. Whether the success, of his is kind of like a little bit probably questionable to an extent. Probably he's got some periods. He's a good man still, regardless, right? Like I always got this picture, of him sitting in a dark room, with the screen monitors, basically with the white dots, moving, with the white lines moving, and I didn't really know why would he spend why he would spend so much time basically in front of the computers, right? Like, what was in it for him? And well, over some time, I realized that this is something that I ended up doing eventually to an extent. So my grandfather used Bitcoin, in early to bet on the football matches. As an engineer, I had a lot of friends along the way that were also coders, programmers, right? They did a lot of the coding stuff, and plenty of those were talking about Bitcoin at that time, especially when there was like 2014 hook, there was the Mt. Gox collapse, that the hack, happened, and it was buzzing. And at that time, when we kind of like hit the parties together, drank some vodka, as the Polish people do, or grappa, right, in
Grappa,
Italy.
yeah.
Uh, then there was not too much of a focus that I could place, mainly because I had to focus on the studies, right? So I was like, okay, I know this Bitcoin thing, but I'm not gonna commit to it because, hey, listen, I need to focus my studies, right? So I don't give a damn about this. I need to finish the studies, then I maybe have some time, right? In retrospective, perhaps it would have been a little bit different. Still, no regrets on my end, simply because it's made me, who I am to an extent, right or wrong. So did the second studies in the top school of economics in my country, and I did the management and finance, right? Although I was kind of like the main, let's say, path was the management stuff, for building the company's businesses. I actually did, my thesis on technical analysis of Bitcoin, right? Which has nothing to do basically with management itself. So I took up, the leading financial professor in the university, in the School of Economics, and kind of like sat down with him. Well, that perhaps in the retrospective, that might have been a little bit of a, you call that, I shot myself into foot, right? I think. I put a lot on my shoulders, right? Because he was very demanding, which is a good thing to an extent. Still, the thesis was about technical analysis of Bitcoin, and the university academic approach to technical analysis is not the merciful one. It is actually filled with a lot of prejudice. It is filled with a lot of those magical thinking, a lot of this myths, a lot of popular sayings, just because someone says it doesn't work, let's say, because they didn't make enough money that they wanted to do with it or make with it. Someone else just multiplies the same myth and rumor and just pass it on. And if there's an academic degree to it, that gives you validity to spread misinformation. Led to a lot of misconception, misinformation about the technical analysis that is a piece of a science, right? So I, after did all those studies, and in the meantime, started learning, because the first investment approaches that I had, was obviously the losing ones. I mean, well, they were the winning ones, because at the end of the day, as a trader, I followed this very classical cycle, right? I joined in at a fairly good time when the altcoins were pumping, back in early 2017, like it was March or April, I think, right when the biggest altcoin rallies were starting. So it was a good time to be in. That was the first time in his life. So I joined, didn't really know much about altcoins and cryptocurrencies, since I just started kind of like having enough time to learn it. Made my first 2x, 3x, 4x on a portfolio, and said, hey, I'm a genius. I'm really good at it. I should continue doing this, right? Then the first correction started coming in. As the market typically slows down, in the summertime, it slowed down then. A couple of altcoins just disappeared, evaporated. A lot of those went, basically it's up like 90% down or so. So lost a lot of money then. Well, a lot of money for that time was basically gone. And, I figured out, okay, maybe I should buy some books and teach myself a little bit more about what I'm doing, so that I have any sort of like a proper idea, right? So that was the time that I finally got to sit down and teach myself. Again, teach myself on the things that I'd been kind of like, just knowing a bit here and there, over the years, that I never really encouraged too much education before. So I sat down, started reading the technical analysis books. One of them was John Murphy, Technical Analysis of Financial Markets. And that was a Many people call this a Bible of technical analysis. And to an extent it is, right? Mainly because it gives you some rough concepts, general overview. That is a fairly good book. And John Murphy is an excellent writer. He's got a sense of humor in this as well. So there's some very, very nice read taste to it. So I started reading, learning more, and starting to utilize, those concepts. However, the whole beauty about technical analysis is that it's barely giving you a little bit of a guideline, a little bit of a standard, a little bit of a concept, framework, idea. However, the markets never really have any fixed rules, so they change, right? They fluctuate. There's a lot of chaos, there's a lot of unpredictability, a lot of uncertainty, and a lot of entropy. And then the entropy is a measure of chaos, in the statistical terms, right? It's this inherent disorder that we cannot get rid of, and once every couple of periods of time, it basically reshuffles the whole thing and causes a lot of chaos. So those are the markets. They are filled with entropy, because market is the institution, right? Is the actual field where we execute the transactions. Let's say you, Mauricio, and I, when we transact, the market is between us. The market is this physical or virtual space, right, that helps us facilitate the execution of a trade. In the institution, in this facility, there are two people, and those people are individual human beings with individual psychology behind this. Each and every single one of us, is filled with a lot of noise, with a lot of uncertainty, with a lot of emotions, and each and every single one of those emotions make us deviate against the rational. So when you add, let's say we are only talking two people in here, and if you scale it and figure out that there are 8 billion people in the world, and each and every single one of us is basically of different emotions, different, different frames of mindset, different religion, belief, different approach to the emotions, to rational, it is very chaotic, right? So it is almost random. So one of the biggest misconceptions about the financial markets is that the markets are random, right? That the technical analysis has no incentive to work because the markets are random. And interestingly enough, it's proven to be wrong on many levels. And one of the simplest ones is Bitcoin. If Bitcoin movements were random, then Bitcoin would have never pumped 9,000%, 9,000,000%, 30,000%, 3,000%. There would have never been those moves, because if that was random, there is no way to move continuously for 2-3 years to the upside. Because if it's random, it's supposed to be go up and down and up and down and up and down overall. Maybe if it lifts a little bit higher, it's still going to be a little bit random up and down. But if it moves up and up and up and up and it goes like this for 2-3 years, this is not accidental. This is not coincidental. So it means there is some persistence to it, right? And those trends, this aggressive trends development, is actually backed by behavioral finance. It's what happens inside our minds, within our psychology, that we are filled with biases, we are filled with prejudice, we are filled with overconfidence. If I flip a coin 10 times in a row and a heads come up, for instance, right? It doesn't make me the best coin flipper in the history. I'm just lucky. Okay? So luck is this statistical deviation, something that shouldn't happen, right? It's this deviation of chance, something that shouldn't happen, yet it happens. If I go outside, of a building, I'm just waiting for my car to be repaired right now. If I go outside a building and I pick up a pile of cash because someone dropped it, it doesn't make me the best genius. I'm just lucky. I'd still return it to them. Still, what I mean, if you get this opportunity is a statistical deviation of chance. It shouldn't be happening. In theory, it happens. So you take it.
And like you said, I think at the end of the day, markets is made of people buying and selling, right? So there is definitely a psychology behind. So if you understand where people are going with their thinking, you can maybe play some cards. And I think everything is made with pattern and behaviors of people. So you can totally, inject yourself into the market and try to understand with some skills, of course, because you have to understand patterns and behaviors and what people are going to do. Basically you have to make sure that you are buying when you need to buy and sell when you need to sell, because that's not an easy thing, And like we were saying in the beginning, People think, oh, that person is lucky, but there is a iceberg illustration of success, which shows the tip of the iceberg, which is the winning part. But then you have all the one beneath the water, right? Which is all the struggles, all the things that you mentioned, the studies, the learning, and all those things. People don't tend to see those things. They only see the end goal, right? So that's why I love talking to people like you, because you have so much of these unseen iceberg under the water, which is the one that interesting me the most, because it made who you are, right? And it made you as a person that you are today because of what you've done in the past. And speaking about crypto and Bitcoin, so, what do you think about the market now? Do you buy into the 4-year cycles, or specifically with Bitcoin? What's your view?
This is such an excellent topic, and I appreciate you asking this, Maurizio. There is a lot of dependence. Back in the day, when technical analysis wasn't really popular, there was no internet, there was no computers, there were no computers. People were sketching the charts on a big pile of paper with pencils.
Wow.
Right? So they would go and check, whatever information they would get. They would run into the, Wall Street exchange, for instance, right? To the New York Stock Exchange. They would go and then just literally take the prices, for what they saw when some guy flipped, the digits, the numbers for stocks, and they just write it down, just run back, put it on the chart. And that's how they did, for instance, every day, right? So when there was no internet, when the newspapers were basically the only media at that time, and the radio, there was not much information flow when compared to what it is right now in terms of the accessibility and, the availability for the information. So the popularization of computers, of the internet, has accelerated the growth and the unity of the markets, if you will, right? So the markets have become more unified. There are a lot of barriers that were taken off as well, right? There was like this, a lot of those economic curtains, if you will, right? In the Europe, as well, that and between the Eastern world and the Western world, that didn't really allow after the Second World War for the goods and services exchange to fluctuate and to kind of like flow, right? So it's only recently that a lot of the barriers were taken down, that a lot of the markets starting being free, right? So there was a public flow. The market started kind of like flowing and relying on those free market rules and bases. So even several decades ago, there were the currencies. Each and every single currency had its own specific fixed price, and that was the agreement. This is our currency. We sell it at this and this price. Right now, it's the market that decides what's the fair price to an extent. Right? Except for some monetary policy decisions, interest rates, and so on. Still, it is the market, the free market, the actual vehicle to decide what the true value is, if you will, right? And this true value is again, statistical term, technical term. It doesn't even necessarily need to exist, right? Because no one knows what the true value of Bitcoin is. It is what the market decides, right? No one knows what is an actual true value of, let's say, of a stock. It's still, there are, ways to measure the accounting method. You compare the price to earnings, price to book, price to book sales, book value, price to sales. A lot of those indicators, still there are to an extent estimations, right? So there's not a single person in the world to tell you, hey, this is my stock and the true value of this stock is this, right? The market, if it's a public float, if it's a free market, this is what the market decides. So the intrinsic value versus the actual price of an asset are two different things. And most importantly, Maurizio, I think that as the popularization of those computers came up, a lot of markets started connecting, right? So that the markets do not trade in vacuum anymore. And if they do not trade in vacuum anymore, it means they are correlated, at times more strongly, at times less strongly, right? So the correlation in the statistical terms is the ratio of the covariance, right, between the let's say Bitcoin and S&P 500, and the product of a standard deviation of Bitcoin and standard deviation of S&P 500. So it kind of like tells you how Bitcoin and S&P 500 co-vary versus the standard deviations of those, right? What it tells you is that, because it can fluctuate from -1 through 0 to +1, right? Most of the time, Bitcoin is very strongly correlated with S&P 500 with stocks, right? So this is something already that is an information. You can make money decisions based on that. It is valuable information because it tells you that, hey, for most of the time, most of the part, Bitcoin moves similarly to stocks, right? So there is some, again, if it happens again and again and again and again, that just maybe we shouldn't ignore that. Maybe it includes some valuable, profitable information, right? So the market started correlating, and ever since the popularization of those technical, analysis, the computer, the automating, the signals, the algorithmic approach to trading came up, the market started correlating more strongly, right? Some things started be more similar to each other. And Bitcoin trades quite similarly to stocks for most of the time, which means that if stocks undergo those 4-year stock market presidential cycle, so does Bitcoin, right? So Bitcoin is this very interesting asset because, well, it has no centralized, it has no cash flow, right? So when I talk to institutions, when I advise to hedge funds, when I advise to institutions, to the banks, even Minister of Finance, I talk to him very often about crypto. There's a lot of prejudice. A lot of people that are extremely wealthy, and I mean trillions of dollars, they manage the wealth offices, the family offices, the wealth managers. There's a lot of prejudice, right? And they say Bitcoin is worthless. It's a scam because it is not backed by a company. It is not centralized. It doesn't generate cash flow. It doesn't produce results or the revenue reports, right? Financial statements. So in those terms, in terms of this discounted cash flows, let's say DCF, discounted cash flow method of valuation of stocks, well, you arrive at a conclusion that Bitcoin is worthless, that it's zero, because it doesn't generate cash flow. However, if you take something new like Bitcoin and try to put it in the outdated terms and frameworks and frames of the stock market model, well, then this is a mistake. This is an error. This is a bias, right? That we have because we try to classify all the new information that comes up within the frames that we already have in our minds, within the things that we already know, even though it doesn't necessarily need to fit at all. Well, it means just maybe it's a new category of its own, and it doesn't even need to fit in something that we already know. So there's the very simple set of biases and prejudice that all those wealthiest people in the world have against Bitcoin, right? Which is something that goes against the common sense if you think about it, because those billionaires, those trillionaires, that you would expect them to know a lot about money, they're the ones who are the most prejudiced, right? And well, just because Bitcoin doesn't fit in this traditional stock market model, it doesn't mean it's worthless. And in fact, when you take a look at this actual price growth over the years for Bitcoin ever since June 2010, well, we've grown since, 0.00000 whatever to, $70,000 in the peak. And there is a repetitive pattern that is often aligns with the halving cycle, where once every 210,000 blocks, the mining rewards go by half, are reduced by half, are cut by half, right? And the mining difficulty spikes. It becomes increasingly and incrementally more expensive to mine the same amount of Bitcoin until the asymptotic 21 million barrier just is met, right? So there's a lot of, I should say, digital scarcity and this digital intrinsic value, quote unquote, that is different, that doesn't fit in the stock market model, right? Still, it is form of a new intrinsic value. It's a form of a new asset, right? That never existed before. And speaking of those, very easy takes for what Bitcoin is, in terms of the innovation, the decentralization, there's a wisdom of crowds, approach, the madness of crowds or the wisdom of crowds. And even, I love the book by Daniel Kahneman. He's an Israeli novelist for the economics. He's written these excellent books about the thinking fast and slow and how we make decisions, why most of the time we make subconscious decisions that are wrong in terms of the finances, how it explains how we fall for all those biases, how we feel overconfident, and how we can fight this. Because if we fight those biases, we can be profitable, because so many bankers, so many of those people, like I said, the wealthiest ones, rejected Bitcoin and ignored Bitcoin just because it didn't fit in something that I already know. And it means, exceptionally in Bitcoin, it means missing out on rallies that give you 90x, 1000x, 30x, 7x, in 2 years. it is Bitcoin is literally the best super performing asset in like history. And imagine missing out on the best performing asset in history just because it's not what you expect, just because it's different than something that you already know, right? So the opportunity cost is a keyword for Bitcoin. When I talk to all those institutions, I figure out they're not going to care about my opinions, because why should they? They care only about the numbers. So you asked about this 4-year cycle. So on one end, there is the halving cycle that approximates to about 4 years. It happens approximately 4 years. The last one was in May 2020, right? Previous one was in 2016, previous one in 2012, and so on. So that is the intrinsic value scarcity boost that makes Bitcoin more expensive, and the price adjusts to it because it is a new benchmark, right? A new point of reference to which the whole market adjusts. And on another note, there is the stock market presidential cycle that Bitcoin, through the correlation, applies. There's this gentleman named Jeffrey Hirsch. And Jeff Hirsch and his father, late father, Yale Hirsch, passed away a couple of years ago. They were the first people ever, before the computers were used in the markets, 70 years ago or so. They were the people who created and discovered certain seasonal patterns. They were the people who ever, for the first time ever, just quantified the seasonal behavior, because just like weather has seasons, the prices have seasons as well, right? Because if what happens on the food market, let's say the crops, the harvesting, the season defines the supply and demand, right? If there's a drought, let's say, in a spot, somewhere where you harvest your crops, there's supply shrinks, and if the supply shrinks, there's less of it, and when there's less of it, we wanted more, we needed more, so we pay more. Prices move up, right? So what happens in the weather season also translates to price seasons, and there are months where S&P 500 or stocks or Nasdaq or Bitcoin move higher and better beyond, and there are months where they are lagging and they are pretty flat or negative, right? So Jeff and Yale were the first people ever to, like 70 years ago, to quantify this and give for the first time ever like a frame of reference, like a study, showcasing in a form of calendar. This and that day has this probabilistic approach, has this and this probability to be up and down over the years, right? This and this month is most of the time bullish or bearish, right? So it gives you very important information. And they discovered certain patterns like January effect, January barometer. They were the people who said that as January goes, so goes the year, right? And this checks out 80% of the time. So if the January closes bullish, which it did this year, the year is supposed to be bullish 80% of the time. If it closes bearish, which it did last year in the midterm bear market, there's an 80% probability over the years and decades that tells you that the market is supposed to perhaps be bearish, right? So there are certain behaviors that populate, there are certain waves and those cycles and the seasons that reappear consistently. And Jeff and his father, when they released the first paper ever, the whole market shifted because everybody started reading this. The banks started reading this. The financial chamber started reading this. The institutions started reading this, and they started reacting to the information. So they were the first people that when they released those seasonal effects, the whole market literally shifted to what was in their book, right? The whole global market. So, at that time, the United States. So, through the CMT accreditation, I attended the New York 50th anniversary symposium this year, where I met Jeff in person. And I had read a couple of his works. This is called Stock Traders Almanac. And they released like 57 or 67 copies already every year, 67 years, if I'm not mistaken. So all that translates to a lot of admiration and a lot of experience on his account. And I met Jeff in person in New York. And I spoke with him, hey, listen, I admire your work. I'm missing something for crypto. There's no other framework for crypto. Why don't we create something together? So Jeff and I released the first Bitcoin seasonality article early this year in September, on 26th of September, which is also purposed to be this way because 26th of September is the worst day of September And September is the worst month of the year for Bitcoin. It's the only negative month that returns 6.5% loss. Okay? Anything else for Bitcoin is positive. Only September is negative, which is pretty interesting because it tells you and gives you information that historically, if you buy into September, you're good for the long term because that's the most undervalued time for Bitcoin, for instance. Jeff and I released this first article, and I use this article to talk to institutions, right? To talk to banks, and I'm giving them not my opinions, I'm giving them facts and numbers. And I say, hey, listen, this is not what I think. This is a fact. This is evidence, right? That's the way to talk to those institutions. And that discovered a couple of seasonal patterns, such as remember to buy in September for this reason that I mentioned. Jeff also likes to say buy in October and keep your portfolio sober. And we discovered that Bitcoin trades more and more similarly to Nasdaq, and not even to S&P 500. It more correlates to Nasdaq. And over the years, the correlation has gone up 400% since 2015. So 400% growth, and the long-term trend. When we take the long-term correlation, there's a direction. There's a direction that is rising, which means that over the years, Bitcoin becomes more and more similar to Nasdaq. And Nasdaq has this seasonal strategy that Jeff discovered with his father that is called the best 6 months for S&P 500 or the best 8 months and the worst 4. So you buy typically into November, October, November, and and there's this popular saying, sell and may go away. So there's this extension of the 8 months, starting from October, from November, that are positive for Nasdaq, and that they last until, let's say, May, June, which is where typically the market slows down for the summertime, right? People go take the chill pill, they take the sunbeds, go chill out in the sun, they take off of the vacation, of the work, go on the vacation. This translates less participation into financial markets, less volume, less demand, and as a result, markets tend to have less fuel to go up, and they often go sideways or fall, right? So you time your decisions into the best 8-month strategy based on this concept, and they run, they run the fund based on that. Actually, you time it with the MACD, moving average convergence divergence, for instance, or any other timing indicator, and you withdraw for the summertime. Okay, and Bitcoin, very interestingly, subscribes to this agenda of Nasdaq, right? So it's very similar to Nasdaq. So for most of the part, you can remember to buy in September. Let's say in October through May or for June, you're gonna literally have this best sweet spot, if you will, to make money. And then the market slows down for the 4 months until September, and then the cycle repeats, right? So there are a lot of seasonal stuff that Bitcoin often undergoes. And this answers the approximately 4-year cycle of the mining, of the halving, and this coincides with the 4-year presidential cycle for S&P 500 and for Nasdaq, that Bitcoin trades similarly for the piece of correlation.
What a masterclass you gave us. Thank you so much. So many bomb of knowledge you dropped. What is the most excites you about the blockchain?
Great question, Mauricio. I think the opportunity, any decision, any choice that we face is always, depending on our angle and viewpoint, is an opportunity or a threat, depending if we are aiming more for the profit, the benefit of it, or the actual risk side. Okay, so we always need to consider those. It's like every decision that we make is a sort of a bet, because we bet about the future forecast, about the future outcome that we have no idea of knowing beforehand. Right? It is a guess, it is a bet. And this bet, each and every single bet has this, return to risk ratio, for instance, right? If the return, the opportunity is greater than the risk, than the threat, then just maybe it's worth taking up on it, right? So I think this is the case for blockchain. This is a very asymmetric, return to risk ratio that is very large, very positive. Something that has checked out pretty well so far. Something that has made a lot of people a lot of money. We even make a lot. I've made tons of mistakes. I mean, millions of mistakes. I'm wrong 70% of the time. I lost so much money in the past. Now when someone asks me what I do for a living, I say that I lose money for a living.
Yeah, you have it on your Twitter.
I love it. Because 70% of the time I lose money on trading. Still, there's a whole beauty about following the trends. I'm a trend follower, right? And my style, my strategy of trading is a position trading. So I take a position and position in the direction of a trend. So I don't flip it, I don't skip, I don't scalp it, I don't day trade this, I don't swing trade this, I don't buy and hold either. I mean, I have my buy and hold strategy for half of a portfolio for Bitcoin that I just simply don't touch, like since 2022, early 2022. Like I was buying Bitcoin, last year, and this year for the long term as well. So I'm not touching this part. The other part of my portfolio is for the active trading, for the position trading, that I trade in the direction of a trend. And trends for Bitcoin are up, right? The bull market is irrefutable. It cannot be denied because those are the numbers, those are the facts, those are the charts. So it's not my opinion. It's literally the bull market trend, the 200-day moving average that keeps moving up for 10 months already. And this is fact, right? When something happened, and charts only inform me about the things that happened, only inform me about the facts, right? If it is a fact, it cannot be refuted, it cannot be denied, because it has 100% guaranteed certainty by definition. When I speak of the bull market, there was a massive breakout in January, mid-January, over $20,000. There was a lot of posts and a lot of alerts that I got that I also tried to convey that, hey, listen, the bear market trend line is broken. The bear market trend is broken, right? The bear market is broken, basically. Following those technical signals that happen once every year, those powerful signals that stand out a lot, can be profitable. Well, and ever since, Bitcoin has grown, basically 120% or so, right, this year. All that translates to following the facts. And if I follow the facts, rely on the trading system, right? The trading system is, taken in the turtle strategy trading, for instance, is a set of entries, exits, the rules for entries, exits, the position size, stop loss, the techniques that you use, right? And the risk management approach to it. If you take something that is backtested, proven, reliable, and you base it on the facts, right? From the signals from the market, then even though you make some losses, it's impossible not to make losses, not to have losses. Even though you make losses, and I make 70% of the time losses, when you adjust based on a strategy that is profitable, based on the technique that I use, for instance, the ATR, the volatility indicators, the average true range, to define my stop losses, to define my position size. And if I give those bigger winners that come once every, one in a while, those 30% of the time, the market actually moves aggressively in one direction or another, then I let the winners run and I cut the losses short, right? So when there's sad market moves sideways, I get chopped on top and I get chopped on the bottom because it triggers a lot of false signals. So this is where I lose 70% of the time. However, the market finally breaks out, which it did last month on 32 over 32,000. Right now it's 38,000. So those are the powerful breakouts that I hunt. I allow myself to get chopped little by little in the sideways channels, and when the more big breakout comes, I just let it run and I adjust my stop loss based on an ATR volatility strategy. Right? So even though I lose 70% of the time, I lose money for living, I'm still profitable. I still have more money than I had before. And that is the beauty of technical analysis. You can win even once every 10 times. You can lose 90% of your trades and you can still be profitable, right? Those are the beautiful things about technical analysis, about Bitcoin. There's this asymmetry, there's this very powerful opportunity about blockchain that really gives you a lot of freedom in the utility meaning of it, as in you can do whatever you want with your money. And also it gives you freedom in terms of, here is your chance to make a lot of money. You decide what you do with it.
One of the things I like a lot about Bitcoin specifically is the option for you to own it entirely, because any other asset that I can think of, it's not yours. Like someone, either an entity or an organization, are allowing you to own it. It could be real estate, it could be gold, it could be anything. So having the opportunity, if stored properly, right? If you have the keys, of course, because if you leave it on exchange, it's not yours. But if you take self-custody, then you become the owner. And as far as I know, this is the only thing. That fascinates me a lot because it's going to open up a rabbit hole of discussions, right? And I also understand that the majority of the people, they don't care about decentralization. They don't care about ownership. They just want to make money. Hence why when I have someone super well educated like you, I like to poke in many different holes, because we have the opportunity to make a huge amount of returns. We have the market moving. I also believe we've seen, I think 15 was the bottom. I mean, at the bottom only, you can only spot it in retrospective, right? But like you said, you have indicators, you have data. So I'm not an expert, I don't do TA, but looking at what this asset has done, I think it's safe to say we've seen, the bottom. DCA is my favorite strategy, if you have a long-term view, right? Do you have something that you would like to keep besides Bitcoins?
Speaking of good projects, there are a whole bunch of those, right? There are 15 or 20 or 30,000 projects, listed on the CoinMarketCap. There are a lot of projects, right? So statistically, there's always going to be the ones that run very well. There's always going to be the outliers on the opposite side. And most of those happen to be probably somewhere in the skewed, a little bit towards the center, right? That's the frequency distribution, if you will, normal distribution. So we search for those outliers. We search for those good projects, that tend to be fundamentally okay and market-wise tend to be fine, right? Because there's this fat tail on the return distribution, if you will. I do hold a little bit of Ethereum. Bitcoin is my main point, right? So Bitcoin is like this main anchor. So when people think of crypto, they think of Bitcoin most of the time. And what I mean, the people, is that the big money, those trillionaires, those billionaires, right? They think of crypto and they think of Bitcoin because it's the most liquid. Liquidity is everything. Liquidity still is low because the markets are pumped out. The Fed, by the monetary policy, to keep the interest rates high, still, 5.25. That translates to business difficulty and to the economic cycle difficulty, not really letting the businesses to glow and flow just yet. Okay, that means that if they start reducing the interest rates, they do it by pumping money into the markets, right? By buying back the bonds. Right, pumping in the money. When the government just buys the bonds, they take the bond and give the cash, increase the liquidity in the markets. And when there's more liquidity, there's better opportunity for investments, right? Because there's less spread, less loss on the illiquid stuff. Rest of the stuff on the altcoins are not so much liquid. So when there's liquidity improvement, the lower interest rates come up, more money will flow into Bitcoin. Into Bitcoin and into altcoins, into crypto. It's going to be easier to have altcoins to run better and stronger. That this is where we see those alt seasons, right? There's a lot of good narratives such as AI, such as gaming, obviously. One of, as the Bourbonist, we partner with a lot of those good projects. I'm invested in a couple of those myself, I invested as well in GameSwift. Those are the people, who really have excellent, I'd say, business concept up there. The combination of Web3, of gaming, of crypto is their big chunks of markets connect together. The timing is right. And it's already made, I think, like 40, 50x, since I actually invested. So it's good. There's a lot of thing about the AI, right now. NFTs are, especially with real world assets tokenization, are coming into life fundamentally. Tokenizing cars, real estate, it's happening really. So I think those are, NFT. I wouldn't give up on NFTs for sure. I'm a Bored Ape Yacht Club myself, so this also opens a lot of networking as well. Good community. So yeah, Bitcoin is a good thing. When the time is right, I'm definitely going to scale much more into AI, into Web3, combination onboarding of Web2 to Web3, the gaming side to it, and the NFT, right, as a technology. So a lot of channels that should do really well, especially when the deeper into the cycle we get. Next year is an actual election year, which is an extension of a good year that pre-election is. Funny statistics, the pre-election year 2023, just like 2019, just like 2015, 11, ever since the Second World War, 1939, the pre-election year, the years before the election, there were 20 cases, 19 of them were bullish, closed higher than they opened. So this is 95% of the probability. If we take it 84 years, because 1939 until now, over 84 years, there was only 1 year that lost money being the pre-election year, right? That translates to 98% probability or so. 95% probability, historically stretched over 84 years. 95% probability for this year to close bullish. And well, it seems like it's going to close bullish at the end of the day. So it's a good thing, right? The next year is an election year that tends to be very often pivotal, right? Because they need to fund the campaign, the presidential campaign. So, well, in order to fund it, you need to have money in the market. So if you want to have money, you take down the interest rate. So this may be the pivotal year for the interest rate policy. We'll see. And if that happens, if there's this inflection and the interest rates start coming down again, there's more tightening coming up, the bonds are being bought, the market's liquidity should improve. So this should accelerate the growth and rise of Bitcoin and crypto along with the other markets. So very good times to be ahead, probably 2 or 3 years of very good, strong, powerful rallies for Bitcoin, for altcoins, global adoption. I may be wrong. Like I said, take it with a grain of salt. I don't know what's going to happen. So if I were to throw a dart and roll a dice, that's where I would go. And before 2026, I'm out of the market.
Amazing. And Adrian, thank you so much for this masterclass. You're such an amazing human. Thank you again also for showing up and giving us your time. Really, really appreciate it. Like I said, next time you're in Dubai, give me a ping, dinner on me. Okay?
Oh man, I appreciate it. Cannot wait to try this fusion between Italian and Asian, man.
Italianese cuisine.
Italianese. I love it. I love it so much, Marty. God bless you, my friend.
Likewise. Cheers.